Welcome to Rising Minds, where our intention is clear and it's to share information for transformation. I'm your host, Sam Daghash, aka the Mind Alchemist. And today is really a special episode, a very special episode, may I add, with having the immense pleasure of speaking to one none the other, which I like to call, and a lot of the people in this space call, a true market wizard, Tom Basso. Welcome, a seasoned veteran trader in the world of trading, investment, and management. Tom is the former CEO of Trendstat Capital Investments Inc., investment advisor and commodity trading firm that managed over 600 million at its peak. Known for his unique approach to the markets, combining his engineering background with data-driven mathematical mindset, Tom is not only a successful trader, but also an educator and an author. I believe you've authored a few books, one of which is called The Panic-Proof Investing, designed to help investors navigate market turmoil. Successful Traders is the second one, which is successful traders size their positions, why and how, an essential guide for positioning, sizing. And the third one is the weather trader, a compelling narrative of Tom's journey from a novice trader to a market wizard. In fact, Tom was featured in Jack Schwager's The New Market Wizards, which is, of course, a testament to his success and wisdom in trading. Today, Tom continues to share his knowledge through his website, enjoythetrade.world. Is
No,
that correct? Sorry,
enjoy the ride.
Yes, thank you for
Enjoy the
correcting.
ride dot world.
There we go. Enjoy the ride.
See,
World.
see the logo right here? ETR, enjoy the ride.
Okay, enjoy the ride. World. Thank you for that, Tom. I appreciate it. So valuable resources out there for traders seeking to enhance their understanding of the markets, where we're excited really to dive into this conversation today. Again, Tom, I really appreciate you accommodating the time because, as you know, I'm based out in Dubai, you're in the US. So thank you very much for being here. Thank you for making the time.
My pleasure. I look forward to this.
Thank you. So I'm gonna start straight in. You know, a person at your stature, in my opinion, I have so much respect for in this space. You know, experience, in my opinion, is the loudest evidence. You know, we can research, we can study, we can do so much, but experience, nothing beats experience in this space, or in many spaces for that matter, in professions. You've been around, I would say, for almost how many decades now? I mean, you can correct me.
5.
Yeah, 5 decades. Amazing. So, you know, you've come a long way, and you've definitely seen markets transform, and you've seen so much in your career. But for me, my first question would be, what's that significant or most significant shift in your mindset over the years, and how has that really influenced your trading strategy, going through all of that in your journey?
Well, my mindset would probably, over the long run, going from in my 20s when I was very caffeinated, stressed out trying to start the business, trying to wrap up my chemical engineering career and move into money management full time. I was building a house, just a whole bunch of things going on, getting an MBA, Master's in Business Administration. And it felt like I had 5 jobs all at the same time. I had no trouble going to sleep. I was exhausted every day. And I think my current life is a bit more paced. I lean on the schedule heavily, but I try to schedule it so there's plenty of space in between. I have space to do my afternoon run, my afternoon process, I guess you could call it, where I update my trades. I think trying to stay in a more neutral state of mind and observe things like X and Facebook posts from a distance, and just like this morning, I saw one that the guy said with absolute 100% surety that something will happen today, or, you know, it was something about a specific stock. I won't mention the stock, but
Yeah.
XYZ is going to bounce by this afternoon for sure. For sure. Is that the only possible scenario there could be? I mean, I try to stay pretty agnostic to whether the market's going up or down. I have
Mm,
strategies for both. I have strategies for sideways markets. I try to incorporate strategies that take in a lot of what the market can throw at you after seeing 5 decades of ups, downs, and sideways. So many that I don't even recall the number anymore. It's gotten to be just I'd have to go and get a graph out someplace and count them all. The You become a little bit more neutral in your thinking, and I think that that's a good place to be as a trader. So you're not trying to predict, you're just trying to look at it, react quickly, react flawlessly. You want to execute your strategy flawlessly. And I think that's where I've been more recently in my mindset compared to uh, back in my 20s, watching every up and down with lots of enthusiasm and emotion and being stressed a lot more and all that. I think things have become much more routine to me now.
I appreciate what you're saying. I call this, in my model of the world, I call it becoming the observer, like you're not really attached or not triggered by what other people are saying and you're getting swaying to the left or swaying to the right. I believe that with experience, as you rightfully said, you start to learn that you become more of an observer and also not really judging things for what they are, but rather being. I think that comes, would you say that comes with experience, Tom? I'm curious because
I mean, if you decide to start predicting everything,
Mhm.
every time you do that, you prejudice your mind that way because you want to be right, you don't want to be wrong.
Yeah.
And so the market along the way has an insidious way of teaching you that occasionally you are wrong and you beat you up a little bit, and then you start realizing, well, wait a second, why am I predicting it doesn't? If I'm running some Keltner band or a Dungeon channel and it breaks out, I'm supposed to buy it. Why do I even care whether I'm predicting the market goes up or not? It's going up. It mathematically just broke out, so buy it and don't worry about it. And then you start realizing that all the effort you put into predicting really doesn't make any difference. So why are you doing that? And then you start just being more of an observer. And that's a good place, a good term for it. And I like that term. I've been an observer for many years now.
It's amazing, Tom, and I appreciate because I can see that aspect, that quality in the observer, and I think that there's a role to play with of course our conditioning. I speak about this a lot in what I do. Sometimes if the ego is there, there's also a part of us that don't want to admit we're wrong. We do our thesis, we take information, we make a call, and there's that internal struggle sometimes. I'm sure you would agree with some traders out there that they don't want to admit that they're wrong. And in fact, that's probably the biggest weakness is like the moment you know you're wrong, you just have to say I'm out. I admit it. It's not personalizing it. It's like taking that personal versus becoming, as we say, the observer. There's sort of a disconnect between whatever you thought it may be versus what it is right now, and now it's time to be able to switch that and shift back away from it. Would you
Mhm.
agree to that? It's I would say it's a
Yeah,
skill.
yeah, I would agree. It's very hard to admit you're wrong.
Mm,
It's easy to get overly excited when you're right on the other side of the mental spectrum. And both are dangerous. Thinking that you're full of it and that you've solved the magic puzzle to wealth down the road
yeah.
is dangerous because you can get a little bit over leveraged. You can say, well, I've just done 5 trades in a row correctly. I'm going to really load up on this sixth one, and then it hammers you.
Yeah.
And that's a good way to put yourself in harm's way.
Yeah.
So just position sizing yourself appropriately on every trade, just as if that trade's just a standard single trade, a single data point out of your next 1,000 trades. It's just one more trade, one more data point. Just keep going, crank the process.
Yeah.
Uh, Boring is good. I don't think my trading, although I've had some good returns over the years, I don't try to think of it as exciting. It's a relatively boring process, and I try to make it as boring as I can. I like to automate as much as I can just to free my time up so I can be outside like I was this morning before I got on the call, pruning some plants in my yard and getting ahead of the heat so that during the heat of the day I can be inside in the air conditioning.
What a
And
blessing.
I enjoy being outside. I enjoy going and hitting golf balls or playing golf or exercising or lots of things. I don't like getting stuck behind the desk unless I'm interviewing being interviewed by someone. That's always a lot of fun. But you really, in trading, I think developing an entire strategy, I think, is a little bit more than a lot of traders think it is. When they start out, it's looking at the charts and deciding that this pattern looks good and I'm going to buy it when it hits to this point, and I'm going to buy 100 shares because it's a nice round number, and they have no idea what they're doing on position sizing. They don't have a strategy. They're making it up on the fly, one stock at a time, or one futures or commodities at a time, or one currency at a time if they're trading FX. And they don't really have a global strategy. They don't have a strategy to deal with down markets. Right now, I mean, the last couple of days, at the time of this interview, we've had 2 down days across every single stock index I trade worldwide
Mhm.
on Tuesday and Wednesday. And so here we are on Thursday. The stocks are trying to struggle higher, getting a little bit of action to the upside, but have done so much damage the last 2 days. We'll see whether it carries and people start panicking and we get into a big slide
Mhm.
on stock indices. But I've seen those before. I'll see them again. I don't know if this one will be or not. I'm positioned to the downside now because prices are sliding. I don't really, and if the thing turns around and starts giving me indicators to the upside, I'll go along. I don't
Yeah.
really care. As a
You know,
citizen of the world, I'd rather have stocks going up. I think the world is a better economy. I think people feel better about their net worth and their retirement funds and all that if you have an up stock market
yeah.
worldwide. But there's going to be some down stock markets. And for a trader to not have a global strategy to deal with all conditions, uh, up and down, sideways, position sizing, what's the universe you're going to select from? What filters are you going to use to filter the universe down to those issues that you're going to hold in the portfolio? That's all part of globally one strategy. You have to figure all those things out, not just look at a chart and say, oh, this looks interesting, and oh, off you go. And you don't even have a plan for how you're going to get out of the thing. That's just making it up on the fly. That's not a strategy.
So true. You mentioned something now that came to mind. You mentioned the panic, right? So it's going downward. There's this panic. There's this emotional charge, and I wanna reference something in your book where in your book Panic Proof Investing. I know you emphasize a lot on staying calm during the market volatility, right? The volatility. And in your opinion, what I'm really curious, how can traders condition their mind to remain composed when their capital's on the line? Because obviously the panic is an emotional response, and then as we know, that affects your state of being, and then you start to behave a certain way. So what's your take on that?
My take would be that most traders, especially ones starting out, especially those without enough capital,
Mhm.
will tend to have their position sizing too high.
Mm.
That leads to larger swings in their percent returns and losses. So you get into the volatile periods, their positions are too large. The volatility hits the larger positions, and they start looking at wow, I'm down 20%. And that's going to pierce your consciousness, your well neutralized mental state, and all of a sudden start getting you to say, wow, 20% of my account's gone. I noticed that. And the human mind wants to take, if you can imagine a graph, and you got the slope of the line of the equity curve is going down, 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 down. The human mind wants to extrapolate that line all the way to zero and say, how much time do I have left before I have nothing left? And so you start, you get a fear thing going, you get a panic thing going, and then you make dumb decisions because you're making them out of panic. You're not staying to the plan. Um, and really, sometimes it's just as simple as just backing off your position sizing. That's why I wrote that book, Successful Traders Size Their Positions, because I put the math in there that we've used at Trendstat days back over the last, I'd say 45 years, I've been using that math. And it's math you learned in junior high school. It's add, subtract, multiply, divide. It's not difficult. It's not differential equations or calculus or anything. And I've used it in a simple way to keep my positions always sized properly. I'm never too over leveraged and I'm never too under leveraged. If you see a position going over and you don't buy the appropriate amount, it's not going to have the effect it needs to have on your portfolio. And if you buy too much of it, it's going to have too much of an effect on your portfolio. Your job as a trader is to get all your positions to be a portfolio, have everyone be contributing its own possibility for gain or loss. Then you have a real diversified, stable situation. The other side of that same coin, and I put this in the book too, is what happens when you get something like a NVIDIA or a real outlier, cocoa earlier in the year in the futures market, orange juice last year, where you get a move that just goes so straight up like a fighter jet taking off and going vertical. And you get a market like that, if you don't manage the portfolio and say, okay, well, this one position here is now no longer just a equal partner in the portfolio. It is now, I'm trading NVIDIA and a few other things that don't matter anymore.
Yeah.
And you look at your daily returns, it's all driven by what that one position does. In my mind, to keep your mind stable, I just keep adjusting those position sizes and make them so that everything's in the same ballpark. So if a particular, like a cocoa position or orange juice position, say you started out with 10 contracts of orange juice back last year and the market goes nuts. Well, maybe you peel off 2 of them, now you're down to 8, and that's enough to keep it balanced. But it goes up some more, so maybe you peel it back to 7. By the time you get done to the end of the run, maybe you're back to 5. But in all of the days that you were in that, you're not getting totally driven by orange juice because you've got a whole bunch of other things doing their thing, and you've sized the orange juice appropriately so that it's part of your portfolio. And if you don't do that, you become orange juice and a few other things. And that to me is not a portfolio.
Yeah, you break it down so well, man. Really, you do. Thank you, Tom. And I want to ask you because you're making it easy for in your book for people to follow sort of a guideline, let's say, right? But for me, my question is do you feel that there is any other psychological challenges that for traders that can't get that right? Like why do you think most traders can't get the sizing positions right? And is there anything else from your experience that stands in the way? Is it greed? Is it something else? Like what do you think it could be?
I think psychologically, a lot of traders, I'll go back to, I don't know if you know the name, Dr. Van Tharp, who is unfortunately no longer with us, but I worked with him many years ago as a model trader, and he just picked my brain apart and tried to understand everything that I do. And I had a good time talking to him about the mental side of trading issues over the years that we did some stuff together. He did a survey once for an investment bank, unnamed, in New York City.
Okay.
And he discreetly took the Gamblers Anonymous 12 steps or 10 steps that if you meet these criteria, you're qualified to join Gamblers Anonymous, and you should sign up right away. Well, he went to Wall Street and interviewed a lot of the traders there. And he found some 30% of the traders on Wall Street were qualified for Gamblers Anonymous, which
Wow.
seems
Wow.
staggering to me, but I guess it doesn't now that I've been 50 years in the business.
Yeah.
I think one of the challenges traders have when you get the screen in front of you and you get to sit there, it's sort of like the same reason people get sucked into playing slot machines in a casino. It's this, I don't know, you're locked on to the action and the noise and the lights. And
Dopamine.
in the case of the trader, it's the charts going up and down and the little beeps going off. And these new trading platforms are nothing like the old Quotron machines, which were black and white and just had numbers on them and didn't make any noise at all. Um, it's a different world today, and now you can do it on your phone. You don't even need a computer.
Yeah.
And so I think the excitement level of just getting in and seeing you make money and lose money, and there's this adrenaline rush, and I think that's very addicting. And that is not good trading, in my opinion.
Mm.
So good trading where you're trying to put together a strategy, think about this. All right, I wrote a book on position sizing and I included the formulas. So if you're going to be a good trader and you want to size your positions somehow, you don't have to copy me exactly. Set your own levels, do whatever you want. I'm giving you a general math in that book, but you can set it higher or lower depending on your temperament. Well, if you're going to do that on every trade that you make, then how are you going to do that? You're going to do it with a calculator, you're going to do it with a spreadsheet, you're going to do it with a program and build that code into your program. There's lots of different ways to solve the problem, but it requires pulling yourself away from that dumb chart and being excited all day by buying and selling and thinking, predicting, and the agony of defeat and the wonderful nature of victory. All of those emotions, you got to let that go, and you got to go over here and concentrate on coding a boring program that calculates your position size on every trade, right? And I think a lot of traders just don't want to go through the effort. They're lazy. They want the excitement, but they aren't willing to put in the effort that might take, in some cases, years to get you to, say, a fully automated place where you can do what you're doing. I mean, I'm trading, what, 7 strategies across like 36 markets now or something all over the world. And I'm doing them every afternoon. I have to run the process, and it would take me maybe on a good day right now, it's probably 40 minutes
Okay.
tops. And I'm about getting within days, hopefully, of getting that down to less than 15
Wow.
because
Wow.
we've been spending a lot of time working on this last strategy that's a little more difficult to program. When we get that done, I'll have everything automated and I'll be down, all my position sizing's automated and all that. But I've been working on this for 5 years.
Mhm, mhm.
So
Wow.
you got to have that
Now,
vision, and you got to break it down into tiny pieces and just say, I'm going to work today and get this piece done, and tomorrow we're going to work on that next piece. And it's a strategic way of thinking towards trading as opposed to worrying about whether Nvidia is breaking out today.
mm, mm. I love your approach. Honestly, this is why I have so much respect when I was doing even more research, watching, and like I said, I've had these conversations with David, and we find a lot in our community of traders, something we always mentor. I talk about it a lot as I say, you got to be a superpower. Actually, in fact, I spoke about it today. I was saying that a superpower for a trader is a trader that can be selective in his trading and not have this urgency and feel because the computer's in front of him, he's got to get into that like a lot of times, I don't know if you're aware of this. I mean, you probably are, of course, but a lot of traders, they go, well, I have I have a job and I'm trading, so I have 2 hours in the morning, I got to put in my trade, Sam. I don't have the luxury to sit and look and everything. So but these unfortunate, they're not valid enough for you to enter a trade just for the sake of entering a trade. So being more selective is a superpower, which brings me to my question that I want to ask you. you again, you have been featured in the new Market Wizard by Josh Schwager, which is an amazing book. For those who haven't seen or read this, please guys go out, the listeners, the viewers, this is something that you gotta spend some time on. And this is among some of the greatest traders. And again, this is not a compliment to you, this is the reality. And I have so much respect to you for this, and your career. But I'm sure you have now reached a level where you have a bit more clarity on what are the mental qualities and habits that at least within your personal experience, that differentiates the top traders out there from the rest. What would come to mind when I ask that?
Well, one of them that just immediately comes to mind is a lot of people try to rate their days as to whether they made money or not. I
Mm,
rate my days as to whether I was able to follow my process and all my strategies in all my positions, stop losses and everything, precisely as I've designed them to be executed. If I've had a flawless day and executed my strategy, that is a good trading day. I could lose $100,000 and it's
mm.
still a good trading day.
Okay, so
If, on the other hand, I wake up in the morning and I had done this one strategy by hand. I added some new markets and they aren't in the automated process yet. And I made a mistake and I went long instead of short or something. And the market went my way and I made a whole bunch of money. And I come in the morning and I check my overnight positions and I go, oh, Tom, you screwed up. Quickly reverse that to the way it's supposed to be. But I ended up making 20,000 out of doing that. That would be a bad trading day. So it's not profits and losses. It's how how can you sit back and think about what you're doing and then execute it flawlessly? And Tharp actually used to say that all the time, that a good trading day is following your strategy and executing it. It's not whether you make money or not, because the strategy is designed to make money over the long run. Any one day, you know, you're going to have days that go towards the strategy. I've never had a strategy that was 100% reliable. My average over my lifetime is probably 33 to 35% reliable. So that means 2/3 of my trades are losers. Every time I go into a trade, 66 or 67 or something percent of the time, I am going to lose on that trade. I do it anyway because I know that 33 or 35% or something like that of the time I'm going to have a winner. And some of those winners are going to be the orange juice or the cocoa or the NVIDIA or some outlier that's going to make me a ton of money. That's where I make my profits over the long run, those outliers. The rest of it, I mean, there was one year way back, to put it in perspective. This was back at Trendstat days. I had the guys in the computer department take our actual trading databases of real trades and line them all up from the most profitable to the worst trade in the book. And then I took that, and we had had about a 6% positive year. It was a pretty boring year. It was positive. We didn't lose money, but it wasn't anything to write home about. And I had them sort it all out. And when we figured out that all of the bottom trades, all the way up into a lot of the profitable trades, washed each other out completely. One Japanese yen trade that we were in the entire year, we were in it for like 15 months, was the difference between that 6% gain and making nothing.
Wow. Wow.
So
Wow.
you've got to find those outliers. You got to be in on them. You have to not avoid them. You can't screen them out. You got to find that outlier. That's the one that pays the freight. And it was very enlightening to me. And it got me thinking about making sure that I do that next 1,000 trades and get everyone into the portfolio, because I never know which will be the next Japanese yen.
Wow, I mean, again, the way you break it down is, I hope our listeners and viewers are making a lot of notes here and explore your books, because I'm confident they will find so much value in them. The thing is, like, again, I'm using my personal experience working with traders and finding the common patterns. There's always patterns, when you work, just personally seeing what are the common patterns. And I find that the traders that have been top performers, like the 6, 7 figures traders that I've worked with over the years versus the guys that are struggling, there's always that emotional intelligence, I would call it. So having an understanding of, I'm not taking things personal. I'm not attached to the outcomes. You see, what you just said something now, it really like almost draws the picture. You're okay with knowing that you're 60% of the time not going to be you're losing trade. You're okay. Like, even when you said it, I was looking at you. It's not like something you're embarrassed about. Traders,
No.
unfortunately, out there will be embarrassed to say, oh, 60% is no, it's too low. I don't want to say that. They want to have a higher, they focus on the win rate. They focus on having a high, and that doesn't necessarily mean that they're going to succeed long term. So again, so coming back to the emotional attachment to their trades, especially when they're facing losses, which is something I always see. I want to take your take on that. Like, what techniques or mental practices throughout your career, because I'm sure you had to go through a lot to get to where you are today. It's not something that you've obviously developed and grown and gone through the pains of understanding this concept. But what are the mental practices or things that you would recommend, based on your experience during these moments of emotional moments of like, this is
I would
so,
say
yeah.
I can think of two things right off that helped me a great deal. First is just something people can do, if they just take a moment and close their eyes and realize that they can mentally rehearse what might happen. So let's say you're looking at a chart and you're starting out in trading, and mentally rehearse what happens when it hits this price, I'm buying. What happens when it hits this price? I'm executing that sell. And you're mentally rehearsing and making believe that your hands on the mouse, even. You're moving the cursor. You know what you're going to do. You're not doing it yet. You're just mentally rehearsing. And it's what you see sometimes if you've ever watched like a basketball game, and you'll see a guy at the free throw line, and he
Yes,
sometimes he doesn't even use the ball. He moves his hand like this, and
yes,
he takes a couple of
yes,
practice shots, no ball.
yeah,
Then he picks up the ball and he does it, and it goes right in the hole, right in
yes,
the hoop.
yeah,
And what he's doing is mentally rehearsing making that basket, not missing it. He's seeing it go through the air and come down and go through the middle of the hoop. Then he just executes it.
yeah,
And just an example of something, I wouldn't recommend doing this in heavy traffic.
yeah,
Come up to a street light that's red, and you're going to stop. And let's say that you got a gas pedal and a brake pedal, automatic transmission, let's say.
yeah,
uh, Mentally rehearse what happens when that light goes green, and think about how fast you can take your foot from the brake to the gas. I'm not saying peel out and burn rubber. I'm
yeah,
just saying to get the car moving. And if you only have a few cars around you and you're not doing anything insane, I'm not saying you should drag race, but you will be amazed at how fast, when you've mentally rehearsed green, go, green, push my foot, green, boom. You're mentally rehearsing. All of a sudden, you're reducing the time to get that done. So that's the first thing. But you can do this with taking losses. Okay, when it gets to this point, I'm executing. I'm not thinking. I'm going to quickly put that stop in. It's going to be there. A stop maybe is good till cancel even. I'm going to put it in there. When it hits there, I'm not going to be mentally distraught. It's part of the process. I understand that it's mental rehearsal. It's preparing yourself for the potential for emotional swing and how you can kind of fight that a little bit.
yeah,
The other item that I would say has been highly useful is what I would call, just in general terms, awareness or observing yourself. Back in my 20s, thanks to basketball and having to call out defenses on the court live and having to do some public, I was terrible at public speaking. I was deathly afraid. I would have never done interviews like this back in my early 20s. And one by one, day by day, year by year, I took some training in how to do some public speaking. And I found myself back in those days, now you have things like Zoom you could use to do this, but back in those days, I just went into the bathroom, closed the door, and looked at the mirror. And I would just talk to an imaginary crowd and watch my face. And am I smiling or am I frowning? Or, what does it look like? How, and, after a while, I can tell if my face is smiling, I can feel my cheek muscles, pulling, right? So that's a smile. And that's a frown or a worry because I can feel my forehead, crease.
Yes.
What you get an awareness of what you look like without even looking at the mirror.
Hmm.
You could do this set up a free Zoom call with yourself and just, I don't know, just start speaking or interview yourself or whatever you want to do. And that awareness in trading is important because if you don't know that you're getting emotionally attached to a trade or getting excited about a trade or getting frustrated with your trading or getting greedy, all the different emotional states that you can go through. And believe me, trading will find every one of them over years. Uh, if you can realize that you're getting off balance by being aware of yourself, that helps you be able to say, oh, wait a second, let's not get greedy here. Come on. Just do your position sizing, notch back your orange juice position to 8 from 10. Don't get greedy. Keep the portfolio balanced. That's what you do. It's another day at the funny farm. Just keep doing it. And you get better and better at that over time. So a suggestion I'd give the traders is take a little sticky note and stick it on your screen where you can see it and say, be aware. And every time you look at that, have your mind just click into, was I aware or was I getting sucked into the screen? And as you get better and better at stepping back and analyzing whether you were aware of yourself and what you were doing, you'll get better at being aware. And that is a very powerful tool in life, not just trading. So I would recommend those two things.
Thank you so much. Those are amazing. And I have a big smile on my face when you were saying that because both of these domains is areas that I focus on. I'm actually, I've done a lot of work around mental rehearsal, and I coach my traders in that because, I'm sure you know this, and those who are listening or watching this, it's really important to remember two things. Number one, neuroplasticity is the unconscious mind, which is the greater mind, doesn't know the difference between what's real and not. So when you are closing your eyes and you're mentally rehearsing over and over again, you're almost creating what I call a mind map. So you map it in your mind, and when that experience happens, it becomes automatic. You're not trying to deal with the situation because you've created a program. I call it a program. You've done that. So, what you just mentioned is like installing a program. So when that happens, this is how you react, and when that happens, and that's the neural pathways creating these neural networks in our brain. The other
Yep.
thing you mentioned, which is putting a smile on my face, is the idea of putting those notes down. When self-awareness is, in my opinion, again, I'm speaking with like all the top traders like David Capablanca and the many traders that I've worked with over the years that are really consistent, because consistency is key. You will always know that they've ingrained those triggers, those call to actions in their space to remind them to be aware, self-aware of their emotion, self-aware of their state of being, and recalibrating. And on that note, I'm going to gift you something after the call. I don't know if I'm actually going to ask you, do you ever do any breath practices or any meditation or experiences for yourself? Is that something you've explored before, Tom?
Well, yeah, when I was probably 30 years ago, I would say, we had a number of people from, I think it was Fairfield, Iowa, which is a transcendental meditation hotspot in the United States, I think. And a lot of people asked me, do I do TM? Do I meditate or anything? And I tried that for a while, but I tell you what, I found that was more powerful. And it'd be very fascinating to talk about it to somebody who's an expert. In transcendental meditation, or if I'm meditating, I'm trying to get very comfortable. I'm trying to say, close my eyes. I'm trying to sort of blank out my mind and just be very peaceful and just quiet everything down to nothing. That's actually how I go to sleep, and I go to sleep in less than 60 seconds.
That's a blessing. Yeah.
I blank my mind out and I'm gone.
Mhm.
Uh, but I did not find that that was very useful for increasing my awareness as the following. The
Mm.
following would be walk down the hall outside my office here, and while I'm doing it, watch myself do it. Intentionally say, okay, I'm going to watch Tom open the door, go out into the hall, and go down to the kitchen.
Mhm.
All right. So I've locked onto one part of my brain that's going to propel my legs until, and everybody's walked before, if you have legs and you're able to function that way. Uh, so that doesn't require a lot of mental power to do that, but to watch yourself do it and to be aware of how it feels on your feet and how your legs are moving and how your arms move, and just be aware of everything, and be aware of what you see as you go by. To me, that populated my brain with a lot more awareness
Mhm.
than did meditation.
Okay.
So I tended to lean towards trying to first become aware of what I was doing periodically as often as I could be aware of it. And these days, after, I don't know, 40 years of doing it, it's pretty much real time. I'm aware of what I'm doing almost all the time.
That's amazing. I mean, that's
And I think it's a process of just getting closer and closer to being fully aware all the time. Certainly, I'm aware when I'm trading. I'm, I, if I ever catch myself looking at the screen and saying, "Wow, what's going on with the Nikkei index? It's down 1,000 points overnight or something." I just say, okay, well, all right, you're short, you're making a lot of money. Don't get excited about it. I'll go the other way tomorrow, probably. I just talk myself into some kind of a steady state, um, neutral sort of posture mentally. And it's that awareness that allows me to make that corrective mental adjustment. If I didn't do that, then you're more like when I was in my 20s, going up and down with every, oh, we're making money, we're losing money. Oh my gosh, like lots of excitement and stress.
I love how you said that. A lot of times people in this space are when they think about meditation, they think, oh, I have to sit with myself and I have to, quiet the mind and I have to close my eyes. In fact, meditation, the definition of meditation is called becoming familiar with. So I want to know. I want to know about me and I want to be conscious of me. And there is a new advanced science today that shows that we can actually meditate with our eyes open. And this is exactly what you're doing. You're actually meditating with your eyes open by focusing on the space around you and your body. And
Mhm.
this is a superpower, by the way. It's a super skill. It doesn't happen overnight for most people, just so you know. So it takes
Not
time.
with me either. It
Yeah,
took me
yeah.
years.
Yeah, exactly. So with you, and I'm commenting on this because I think you'd find some interest, some insight here. So even when I'm speaking with you now, and I'm obviously getting to spend time with you, your nervous system and the way you hold yourself, I call this a coherent state. So there's not many things happening in the back end of your mind. So there is a coherent brain wave. When we are in a calm state, parasympathetic, you're more the what we call this. I think we did it offline. We spoke about the observer, right? The observer effect. So you're in your body, you're present, you know what you're doing, and you're not going unconscious. Most people, Tom, whether people don't like to admit this, but believe it or not, most people are running on programs. Most people are unconscious all the time. There are a set of programs that are getting triggered, and according to their triggers, which is the emotional response, it triggers a certain state, which makes them start to think and feel a certain way, and now they behave a certain way. What
Mhm.
you're doing, and I'm very happy to use you as an example. You are not reacting and going into the programs. You're going, hey, don't, you just said it, don't get overexcited about today, because tomorrow. So you're always keeping level headed, but that's the higher mind. That's what I call a conscious trader. Honestly speaking, you are a conscious being. And we always tie trading and we focus on trading, but in essence, I'm almost sure if I had to come and sit with you and I had to observe you in your life with people and situations, you're probably exactly the same as you are now, where you don't react too quickly. You listen to what information coming in, you digest that information. You're not quickly to jump and judge or react. You're responding. Correct me if I'm wrong, Tom. This is what I'm
Yeah.
reading at the moment. In that
My
respect.
my wife has a saying, you don't want to be inside Tom's head. Yeah, I yeah, I'm pretty much this way all the time. If I'm out doing landscaping, I was pulling some pruning a couple bushes and pulling some weeds this morning, get ready for the
Yeah.
photo shoot that we're going to do at the house here in about another 4 hours. And I've got a couple of photos that I want to take myself of some of the remodel that we just got through doing. I've got a spreadsheet that tells me which pictures I've taken already, which ones I need to take. I've got a tripod and an iPad all ready to go, and I'm waiting for the lighting to get perfect for the shots. Um, you know, yeah, whether it's trading or if I'm in the kitchen cooking or doing landscaping or playing golf. Playing golf, I'm trying to stay very even keeled. If I make a birdie, I'm trying not to get excited about the birdie. And likewise, if I take a double bogey and I really mess up a hole, trying to say, okay, that hole's over with. Let's get this one, next one, and try to just stay even keeled and keep staying with the process. And
I love that, Tom. I really appreciate that, and I have so much respect for the caliber and the personality that you have crafted to where you are today. There's something that I would love. You've given so much value, so I want to share something with you that perhaps can always add. Because we're always, no matter, we're always students
I'm
of life.
always learning.
I always say no one. I don't believe in experts, because if you're an expert, it means you know everything, and no one knows everything. I think we all have room to learn. And in my opinion, I always say this to my students as well at the academy. I'm like, move in with an attitude in life where you don't know what you don't know, right? You don't know what you don't know. Like, stay in that space of awareness. But there's something I want to share with you that I think, this is why I want to gift you this, but it's something I want to share with you that I think you're going to love it, because it also doesn't require you like having to do a deep meditation. But have you heard of the new, oh, I wouldn't say new, it's been around for centuries, but now modern science is catching up with, which is known as brain and heart coherence. It's a practice that you do. Have you heard of it, Tom?
No.
I'd love to enlighten you. Okay, so there's something I can share because I think it might be of value. There is actually an institute called HeartMath Institute, based out in California, and I've done a couple of courses to educate myself in this practice. And what they found out is that the heart has its own electromagnetic field. And they found that, of course, the brain has its own electromagnetic field. And they found that if you do a certain practice, which I'm going to break it down to you now, because I'd love you to experience this, and I'm gonna email you and check in on this. And basically, you sit with yourself, okay, eyes open, eyes closed, whatever it is that you want, and you just slow down your breath to a count of 5. So you breathe in through the nose for a count of 5 and out through the mouth. But when you're breathing out through your mouth, you're focusing all your attention, and you do this well with your body, you're focusing all your attention in your heart, on your heart center. Okay, so you're focusing your attention in this domain. Okay, so you're breathing in You slow it down, in for 5 or count of 4 and out for a count of 4. Okay. Then what you do, and this is where this is the part where I think you're gonna go, okay, this is where it gets magical, is that you start to focus on anything in your life, and everyone that's listening can also, of course, take value from this. But you focus on anything in your life that elevates your emotional state. Meaning, I focus on gratitude. So you focus on anything, your beautiful home. You know, the guys are gonna come around and take some pictures. Just the anything that opens that heart center, and you breathe through it for, you could spend 5 minutes, 10 minutes, but all of a sudden, what happens? The electromagnetic field around that heart, and everything I'm sharing is measurable, and guys can research this on the Institute. There's an electromagnetic field that goes up to 8 meters wide. Hey, Tom, 8 meters wide. Can you imagine? And it influences our brainwave. And all of a sudden, our brainwaves starts to come into what I call you right now, into which most people aren't, unfortunately, into what I call a coherent state. So you become even more coherent, you become even more present, you become even more conscious and self-aware. And I've seen this firsthand, of course, in my life, but also with the traders. The moment they do this, and they do this before they start their day in trading, they are more where you are right now. They are more in their body, they're more present, they're not triggered, they don't have these emotions that's pulling them into. So you're stepping out of the program. And why do we step out of the program? Is because our brain waves, when they start to become coherent, we start to be able to go into the operating system. So we start to see things for what they are, as opposed to being called into different little, inner thoughts or inner things that are occupying. So it's almost like resetting your computer, Tom. And I'm going to share that with you, and I'd love you to, honestly, I'd love to hear from you. I'm genuinely excited for you to try it, because I think this is going to give you, and by the way, all the research shows that there are things that starts to change in the physical body that actually starts to heal itself. So people that have certain, back pains or illnesses, when the body is back into balance, which as you are, it's the best, it's a rest and digest. You're healing, things are just doing what, because the body is the most intelligent thing. A lot of people, unfortunately, today have been fooled into the illusion that I need that medication and I need this from outside and I need that to feel good. But when you understand that your body is the most intelligent thing that's ever been made, and it has all the answers, really, that heart of yours has its own memory. Can you imagine, Tom? It has its own memory. It has its own neural pathways, it has its own intelligence, and it starts to feed in information to the brain. And I think this is where you find true wisdom, which comes from the heart. And you don't have to be religious about this, but that's the science today. But if you go back to ancient wisdom, they all said, follow the heart. Thank me and you shall receive. It's all about that relationship with the heart. And I just really wanted to share this piece of information with you, Tom. And I just think I think you would find it interesting, of course. I have one last point to ask you, and I want to go back to your website, which is enjoytheride.world. It focuses on educating traders. I want everyone here that's listening to go visit this website. And what I want to ask you is, what do you find to be the most, and this is where we can sort of wrap things up. Again, based on all the experience, what do you find the most challenging mindset aspect for traders that to grasp when they are in their early stages of learning, and what are the top tips that you would help them to shift into becoming more profitable and having that right mindset?
A couple things that come to mind that I see a lot of new traders do is they're new traders. They're working a job. They're trying to do something part-time. They don't have enough capital in their account. They're just trying to get started somehow and become a billionaire by the time they're 30 or whatever. And so they're over leveraged, and that leads to a lot of excitement and emotional response. So that's the first thing that physically they're doing, not enough capital. Second thing, and it shouldn't be a problem in today's world. It used to be back when I started out, you had to do odd lots in stocks, and it cost you severe amount of money, but nowadays you can almost trade fractional shares in some cases. So proper position sizing is woefully lacking amongst new traders.
Mhm.
Diversification, I find to be a problem with new traders because they don't have, I mean, they don't have the money. I can spread across six, seven strategies across multiple time periods, across multiple indicators, 36 markets or whatever. I can get a lot more spreading of that risk. So it tends to emotionally take care of the problem of me noticing any one market because there's so much to look at. It just sort of becomes sort of this blob I'm running. And I think new traders tend to focus on 5 or less positions, and they've got too big of a position. So their focus is much more emotionally attached. I would say that's the case. I'd say new traders don't tend to have a strategy.
Mm.
A lot of I've written, I've given talks, it's in, I think I got 2 flowcharts in all-weather trading. It's the same illustration. I put it in twice because it's one of the most important things I can think of in trading. And that's the entire process and all the different aspects of having a complete trading strategy. If you don't have all of those blocks that I put on that flowchart, then you're missing a piece of your strategy. Fill it in. Take the time to work on it and answer those questions, or at least admit to yourself that you don't want that in your strategy for some reason. I think that's another thing I find new traders, they start out and it's like they're drawn to the charts on the trading platform and they don't really think through, okay, if the market goes up for the next 2 years straight, this is what my strategy is going to do. This same strategy, how's it going to act if the market goes down for 2 straight years, 50 cents on a dollar? What am I doing then? How do I protect myself? How do I make sure the portfolio tries to grow during that period? Now, let's say it goes sideways for the next 2 years, plus or minus 10% tops. What am I doing then? What do I expect to happen? What do I mentally prepare myself for during that type of environment so that when it does go sideways for 2 years and I'm off by 20% because I've gotten whipsawed a bunch of times, I don't panic and become emotionally distraught and abandon everything when in fact, if you really thought logically about it before the sideways happened, that's what you would have expected to happen. And it did happen. So you shouldn't be surprised and you shouldn't be distraught. You should just keep on keeping on. That's your strategy. And the market did what it does. You know, you go along for the ride. And that's part of the reason I call it enjoy the ride.world. You know, the ride is up, the ride is down, the ride is sideways. Enjoy it.
And do the dance, like they say. Just dance with it. Dance with it. Learn how to dance with that, with while you're riding that wave. Tom, I really want to say from the bottom of my heart, thank you so much for being here with us today. It's a true honor and a pleasure, and I'm sure in the future I'll have you back in and we can dive even more. I feel we could speak for hours, but I want to say again, thank you so much for your wisdom today, sharing with us, and and for the listeners out there. This is really, there was some key pieces of gold information that was shared by Tom. I would encourage you guys to watch this again, or if you're listening to this, please listen to it again. Take some notes. Go check out those books of wisdom. Like I say, experience is something that you cannot buy. And Tom, you're a wealth of experience and truly a market wizard. Thank you so much for being with us today. Thank you. Thanks again.
Hey, Sam, it was a lot of fun. Let's do it again.
Yes, we will do that for sure. Thank you so much. Have a great one, Tom. And enjoy the rest of your day with the pictures and everything. Thank you.